Morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets webinar, where we take half an hour each day to review the market open in Asia and the outlook for the Middle East morning and the rest of the day as we move into Europe. Um, there's no doubt that the big story in the last hour or two is coming out of Europe, and perhaps we have a nice representation this morning from Kevin in Singapore, John in the Middle East, and Adi in Europe. So we've got the full New Silk Road and more covered. But Adi, I'm going to start with you this morning, given that you're the closest to the big stimulus bazooka. And welcome your views on the decision out of the EU to reach a 1.82 trillion euro COVID-19 recovery deal, which is about $2 trillion in real money. What's your thoughts on that, Adi, and the outlook for the impact for the markets?
Well, good morning, Sean. Good morning, everyone. The negotiations have been very, very hard, and to be honest with you, I think these negotiations have been a bit of a landmark for EU. Had they failed, I think it would have been seriously bad news. Now, given the agreement and the fact that almost half of that very, very large amount of money is going to the weakened states, is certainly a big achievement. As far as the markets are concerned, we can see already Asia's picked up. Macro situation is definitely looking better, and at the same time, we have another package being negotiated and discussed in the United States. So the whole macro picture is actually relatively positive. So we could see, generally market picking up on the back of that. And of course, I'm sure you'll pick on fundamentals after that, which are slightly different. But macro picture is certainly very, very positive for the market.
Well, maybe Kevin Wright, lead analyst for Kpler in Asia, back to reality. Story number 6 in the digest today, Kpler report indicating Indian crude imports down 25% in June. Big bazooka stimulus reality. The two, how do they meet up, and what's the outlook for India?
Good morning, Sean. Yes, a very interesting one, a report that I put out myself last week, actually, so quite nice to see that referred to. It's a very interesting story. Indian crude imports dropped to 3.3 million barrels per day in June, the lowest we've seen probably in 15 or so years. July will recover slightly, but I think there is still going to be a hangover of that, of the very strict lockdown that India went through. Indian exports product exports have struggled to find their traditional homes. Arbitrages to Europe, for example, have been closed. Even though we've got decent contango in Europe on jet and gas oil, there's so much product in tank and so much product on floating storage that there's just no room to take any more. So Indian barrels have had to find their way to Australia and to various other parts further east. So it's a very different scenario. Obviously, things will normalize as we go forward. The lockdown in India is less strict now than it was a couple of months ago. But I think still, there is still a way to go in terms of recovery.
John Roper, CEO Uniper, CEO Middle East, Uniper Global Commodities, soon to be CEO of Uniper, of course. Promotion live here on the webinar. John, gas prices seem to keep finding new lows. A story in the digest today with the U.S. exports falling off a cliff, gas exports, that is, gas prices are not in the healthiest place. What's your outlook for that?
Well, I mean, I think there's clearly gas prices are subdued globally because of COVID. But the recent drop in gas prices in the US, one of the biggest producers, EQT, came into the market having pulled about 1.5 billion cubic meters of gas, a billion cubic feet of gas rather. So that they've put a lot of gas back into the market, but there's nowhere for the gas to go at the moment. So it's not surprising that there's pressure on prices. I mean, gas prices, at the beginning of the week, they were about 1.6, is that right? Dollars And in Europe, TTF is trading, just a bit below that. JKM is actually more robust than I think we would have expected in this short term. But the gas story is very interesting, isn't it? I mean, look, the number of cargoes, LNG cargoes, going out of the US last week was down to its lowest level since 2016. We read in the reports.
What does that mean, do you think, John?
Was producing.
The arrival of US exports pre-COVID and in the recent years had kind of been a competition, or certainly had a big impact for Middle East suppliers into Asia. They kind of supported the Asian buyer's strength, if you like, in order negotiating oil index or moving away from oil index, destination clauses, etc. I'm wondering, a weakening US exports, does that strengthen the Middle East with their Asian customers? How does that dynamic, that triangle play out?
I think you just have to look at who the resilient suppliers are. I mean, Qatari volumes have still remained pretty strong going into Asia. If you look at the net price of these cargoes with low Brent indexation, they're very, very affordable cargoes. So as long as you've got a reliable supplier, you've got shorter transport distances. So these Middle Eastern cargoes are going to be very competitively priced. And there's a certain pushback from Japan and Korea in terms of what they're prepared to pay with regard to the price negotiations. But it still comes back to, one of the same stories that the Qataris will use, and that's that they've never missed the delivery of a cargo.
And the US now have, I suppose, or...
Well, I mean, people decide not to take US cargoes at the moment because of the contract structure. So they're allowed to do that. But interesting, alongside Kevin's note, LNG imports into India have remained strong in sort of June and July. So, it's a different story for different users.
Adi, the other story that was that it seems to be resonating with me is the fact that oil prices aren't reacting to any of these big announcements, right? We had the big OPEC announcement last week. We had the bazooka out of Europe with their stimulus. There's a big stimulus coming over the hill from the US, but yet the oil markets seem to be somewhat in a coma, not really taking it as a direction either way. What's your view on that?
I'm not surprised, Sean, because the oil market is extremely difficult at the moment. I think we've kind of agreed that macro situation is very, very positive, and it's very much reflected in the stock market and various other mini bubbles that are happening. And last time I think we discussed about Tesla shares and Nikola shares and so on. The other side of the flip side of the equations are fundamentals. While we've had a very, very good June in terms of Chinese imports, I think China was importing in June. I mean, picture's getting clearer and clearer now, about 2.5 million barrels over and above what they imported last year. That's massive. And there's no doubt about the fact that a lot of that went into storage. In fact, there was so much oil in the storage, on onshore storage right there at the export terminal or import terminals, that the shipping was clogged up. The internal pipelines actually had problems coping with it. So the next question is, well, there are two fundamental questions. Impact of the coronavirus in the US and India, which is pretty much sort of out of control at the moment. And it will certainly have an impact on demand. Kevin's already addressed India. US will certainly, demand is going to get hit. On the other hand, also we see Chinese importing tapering off. Again, following ship tracking, they certainly have come off. Probably July relative to June, maybe down almost 1 million. It's still early to tell. So Chinese demand may well take a breather at some stage, especially if the flat price goes well above, we are now $43. If we go over $45 on the back of macro, I think China may just step back.
Evan, what's your thoughts on that, the outlook for the that's Chinese imports sustaining through the second half.
Yeah, I think Ali makes an absolutely spot on point there. It's all been about domestic margins. The retail price in China of gasoline and diesel has been amended up in the last few weeks in order to make sure that those margins are still there. Excuse me. That has therefore incentivized refiners to run as hard as they can. But you're getting to a situation now at over 860 million barrels in storage, and it's kind of flatlining over the last 2 or 3 weeks. There's no space left. And if the refiners do start to struggle because, as Ali says, because flat price rises and the NDRC can't change the price, then we will start to see a drop in those imports, and we'll start to see potentially a drop in inventories.
What about the opportunity for floating storage? I mean, the decision of China to go 2.5 above average a day, 2.5 million barrels a day, it must be a strategic decision in my thinking, and that this is not, it's obviously the opportunity of the price, but ultimately it's a strategic decision to store this amount of oil. And if indeed it is that, then maybe they will find ways to keep buying. I don't know. What's your thought on that?
Absolutely strategic. If you look at the breakdown of that 860 million barrels of inventory across strategic versus commercial and versus refinery stocks, it's the strategic petroleum reserve that's really risen over the last 4 or 5 months by something like 60 million barrels. That's all been about an opportunistic strategy and activity by the Chinese government to go out and effectively take advantage of cheap prices. I mean, you go back to February, March, and we were in the 20s. And the Chinese government has just said, this is too cheap to refuse to turn down.
John, this narrative of being caught between, if you like, as Christoph Ruhl sort of described it earlier in the week, the eye of the storm, that there is a storm to still come. What is your outlook for that thesis, as well as where does COVID and its second wave, or however way you want to describe it, start to come back to impact investment and markets?
I just think, it's going to create uncertainty, isn't it? It's going to create a lot of volatility in oil markets, less so in gas markets, I think, just because of the product. But no one can really have an understanding of where these markets are going to go. I mean, Adi probably will have, because he does an awful lot of research on this, but the rest of us, by and large, we're bystanders. I mean, we listen to the economic data that comes out of countries. We look and see where our cargoes of oil or gas or products are going, and whether the demand is up or down, and we try and cope with that market signal. With the likes of Uniper, obviously big European energy company, would you expect this stimulus announcement today? And obviously it was known and very public that it was coming, but nonetheless a huge amount of stimulus into the European economy. Does that bode well, do you think, for companies like your own and others? Have to leave public statements like that to our CEO. Right. Yeah. Well, the other CEO, perhaps. The more important. But nonetheless, one, yeah. I mean, the idea that you can create real demand out of stimulus, does that feel? I think we're a big power developer, power producer in Europe, and I think I said on the last documentary that power demand has certainly been down in Europe, but power demand is generally consistent. People need it. And, as we go through the summer, we're going to start to see people requiring heating for their homes, and we'll have to have a look at, how the market adjusts to that in concert with what this economic support for the European region does. I can imagine that would support the use of gas in these economies, certainly, and the use of energy in these economies. Kevin, from a perspective in Asia, does it feel like that the second wave is a serious issue or not? I just did an interview this morning with the senior executive of Korean Gas, and he remained quite positive that the Koreans have this under control, and that that the outlook was quite bullish. Do you think Asia looks at it that way, or there is concerns, limits that keep the markets contained by the reality of COVID in Asia?
I think it's very granular in the sense that each country seems to be facing and dealing with the problems in different ways. I mean, just before we came on air, I was reading about what's happening in Hong Kong and how Hong Kong is treating it and managing the pandemic differently from cities in China. You know, Urumqi's seen some cases over the weekend, and the government has instigated mass testing. They're saying they're going to test the whole city, and no one is allowed to leave until they've been tested. Whereas Hong Kong is sort of managing a low level. And that sort of shows you, even within, and I know there's a whole Hong Kong-China debate going on that's wider than just COVID, but even within that sort of two systems approach, you've got a difference of strategy. And I think that's the case across the region. You know, we looked at Vietnam as an example of how to manage the crisis and how to manage the pandemic very effectively, very strictly. And we contrasted that with Indonesia, which hasn't really managed it very effectively at all, and is seeing, I mean, there are even reports this morning of corpse thefts and all sorts of stuff going on. So it's, you know, when you've got that, frankly, that level of mismanagement, it's inevitable you're going to get a second wave, and that's going to have its impact on economies across the region, depending on how well they've managed it.
Adi, with that, we had OPEC decision last week to raise production come August by at least 2 million barrels, but if you do the pluses and minus, maybe at least 1 million anyway. A weird time to be bringing more oil onto the market, no?
Well, we are. Let's not forget that that was a pre-arranged. It wasn't just a decision to increase. It was an idea to taper that sort of cut over time, and that makes sense. Actually, if you look at the market, Sean, I think it does make sense. Our market is still fairly tight. Urals has come off quite a bit from the highs of 250 over Brent now to about 50 to $1. But Dubai is still in backwardation. And by the way, since I mentioned that backwardation, that's one of the reasons that floating storage is not going to work in China or anywhere else. Dubai is well backward. So, you know, if anything, oil is going to keep on coming out of storage. So overall, I just, you know, I think that the supply side of the picture within OPEC Plus is looking very, very tight. I think levels of compliance are very high. Initial estimates of the August Urals program are very low. So that's quite tight. So that situation is fine. I think what is not fine is that at these levels of flat price, you see Brazil, you know, exporting record. Brazil, I think the number for June, now I'm not 100% sure, but roughly triple their exports into Asia, into China. So other members of outside the club are, you know, using this opportunity to supply plenty of oil.
Do you think it's sensible and for the OPEC Plus group to proceed with increasing and protecting market share at the risk of a lower price? Is that a strategy that makes sense?
I right now, I think they just need to stick to their guns. If I was them, I would just stick to their guns. They've really done a pretty incredible job in tightening this market. I think that there are things that are out of their control, and out of their control is certainly the demand side. This, from day one, this has always been a demand shock. And I think that OPEC Plus have managed it extremely well from their perspective.
Absolutely. I'm sure they would be delighted after their announcement last week that prices didn't come off at all, practically.
I agree. I mean, I think, and that's all seen in the fundamentals. If you look at yesterday, I think yesterday Nigeria announced their official selling prices. They've all increased again. You know, the market is looking pretty good, in a very good shape, and that's why we are where we are at $43. And the reason we are not going a lot higher, which we could, is as we said early on, there's all these uncertainties regarding COVID.
Well, that's a nice segue into my morning survey question. Are we going to go higher with this stimulus bonanza? If we bring up the survey question, please, for everybody to give us their view. The stimulus packages over the next few weeks, we've just had the EU one announced this morning, which is, you know, close to $2 trillion, and another 1 or 2 trillion expected from the US in the coming weeks. Will it be the trigger to send Brent towards $50 and break out of its current stuck in the mud 43? What are your views on that? So everybody give us, and we'll go to the panel for their views on the outlook for the rest of the week. Kevin, I'll start off with you. What do you think guides the markets this week, the rest of this week? Obviously, inventory reports due today and tomorrow. We saw drawdowns last week. What's your outlook for the rest of the week for the markets?
Yeah, I think Adi makes a point that's been made a few times in recent months and weeks, and that's that this is really about demand. That stimulus is obviously going to help Europe. It's going to help some recovery there. Does it provide enough support for those economies for us to see Brent to get towards 50? I'm skeptical, but I'm always a bit bearish anyway. But I think until we start to see demand recovery, we're not going to see sustained higher prices.
What about the downside?
The downside, I mean, you know, I use the word as often as everyone else does, but the COVID impact is still being felt widely across this region, across the States, across Europe, until there's some sort of direction, some sort of clarity in terms of, you know, it going away or a vaccine, etc. I just don't see that there's a really bullish argument out there for recovery. It's you know, it's something that we can't ignore. It's that simple.
John, your outlook looking forward this week, we have obviously between the stimulus and the, you know, another week of drawdowns that could come as soon as later today. You know, we saw close to 8 million barrel drawdown last week in the US inventories. If we see the same today on the day when EU announces such a stimulus package, surely that could be a trigger to get to the next sort of range in the oil markets.
Oh, I don't know. I think I'm with Kevin on this. You know, I think there is enough.
You need to get out more, man.
No, well, you know, I tell you, the stories that I find most
Find
interesting.
some people on your boat. That would be the way to contribute to the
stories. Sean, the stories that really interest me, I mean, aside from the oil markets, if you look at what Chevron's done and what Warren Buffett's
yeah, we didn't
done
even mention that. Finally, a buying.
but,
yeah,
you know, that's another side to the indication of demand and the health of the economy. You know, Chevron's taken a bet that getting into more US gas for the long term is a good idea. It's got itself into one of the world's most interesting political environments. You know, where the East Med countries, with the exception of Turkey, have formed their own little forum. So you've got the East Med Gas Forum, as opposed to the gas exporting countries forum.
yeah.
You know, gas as a demand indicator, as the health of an economy indicator, is quite interesting. And clearly Warren Buffett thinks that, you know, gas is going to dominate power generation in the States for a period of time. You know, buying transmission and gas storage.
And now we see this Chevron deal.
That's another
Do you think more will come? That this might trigger some others?
Oh, I think inevitably, you know, with prices as low as they are, with valuations of companies as low as they are, still, you know, the threat of bankruptcies, there has to be more consolidation.
Still a lot of cash on balance sheets, right? There's.
Well, I mean, it appears so, doesn't it?
Before we go to Adi for the last word, let's bring up the survey result and see what the room thinks on this question. Disagree. There's a big 2/3 disagree to the stimulus package being enough to trigger moving upwards in the high 50s or high 40s rather than settling where they are. So I suppose the room is in consensus with the panel. Adi, the last word with you. Outlook for this week, drawdowns, other things coming.
I think it will be a tag of war. I know you were talking about drawdowns and US stats. I'm more inclined to follow what's happening in China. I think there'll be tag of war. I think the stimulus is positive. It's very good. The news regarding the vaccines, we haven't touched on that, have been very positive so far,
Yeah.
so good.
That
So
certainly moved the markets yesterday.
A lot of positive stuff that will try and push the market higher. On the other hand, I agree with Kevin and John as well, 100% that, but I'm coming from more sort of China point of view. I think as soon as market rallies above $45 to $50, I think they'll just back off. The buying is going to drop to probably 2-3 million. And that's it, you know, market comes down. So I think it's going to be a tag of war. It's going to be choppy market until we see some positive signs of recovery regarding the pandemic.
The the last word may go to the chat room, which says
to Andy Laven, who has been chatting non-stop.
They're not paying attention in class. They'll be getting a note from teacher. The idea that the stimulus is like throwing a life vest to somebody who can't swim. But nonetheless, we'll see how the market digests it. Clearly, there's more of that to come. And if it can create also, I mean, that's a lot of money to spend. Where that money will be spent will be quite interesting, and in the new green economy and infrastructure associated with it. But nonetheless, all these positive indicators do seem to be supporting price in the low 40s, but it still feels like low 40s is a ceiling rather than a floor. And I think that might continue to be the case until there's some real demand data that says yes. And the vaccine might be the one that Adi points out. It does seem to be getting increasing noise. False dawns, though, lots of them, I'd say. But thank you very much, Adi, John, and Kevin, for your insights today. Have a safe day, have an economically productive one, and we'll catch you all later in the week. Thank you so much.